Q1 numbers are out for Meta Platforms and shares are dropping in the after hours. We're going to go through the revenue, the profit, the all-important second quarter guidance, how that matched with expectations that Wall Street had for Meta. What does this mean for Q3, Q4, into next year for Meta? Why are shares dropping as we go through these financials, the operating income, cash flows from operations, dividend payments now from Meta? They're all looking absolutely fantastic, but in the after hours, we are seeing Meta shares, at least the current time, down over 11%. Now, can Mark Zuckerberg get on the conference call and turn things around? Or will Meta open the day tomorrow with huge losses? We'll talk about some of the areas that we're monitoring. If these losses stay in place, is this a great opportunity to buy or add to a position of Meta Platforms? What is going on, investors? Hopefully you guys are doing well out there. Big tech earnings are coming your way, and not much bigger than Meta Platforms. $1.22 trillion, helped by the fact that shares of Meta up over 131% over the last year, even year to date, pop it off, up over 39%. Shares have just been on an absolute tear. Now, those Q1 numbers came in. Revenue coming in, we'll call that $36.5 billion. It's really $36.46 billion. We'll come over here and show that to you from a detailed perspective here in a moment. Beat those expectations on the top side, which were inflated because Meta had huge guidance in the previous quarter. That was 27.3% growth year over year. And you're not looking at a stock that's like wildly pumped up overvalued. 24 times forward PE, and you're growing at 27%. Wall Street expectations were for 36. The high end was up towards 37. And so maybe some disappointment there. On the earnings side, we'll get to. Now, I think we'd be remiss on this day when Meta reports their Q1 earnings. We have a bill on the president's desk, and he signed it, that is forcing a either TikTok ban or a Chinese government divestment. They are going to take this to court, and the irony is incredibly thick, guys, because the Chinese government is going to argue First Amendment rights for TikTok. You don't have any First Amendment rights in the great country of China, but they're going to come to our country with their own product and their own business and argue that. And at the same time, the Chinese government bans sites like Meta, bans sites like Google, bans other types of things. So I tell you what, I don't got a big problem with this. I don't think Joe Biden has any interest in overturning this. And the next president, if it's potentially former President Donald Trump, he's not going to overturn this either. What this means broadly is, look, if TikTok gets banned and it goes away, that's incredibly bullish for everybody here in the United States, not just Meta, but YouTube, Snapchat, pretty much everybody. But what it also could mean is eventually we could potentially have a bidding process for TikTok. They might go IPO. They might find a contortion of investors. I don't think we're going to see one of these big tech companies being able to buy this. Obviously, Google, Meta, Apple, there's a number of different companies, Microsoft, they would love to step up and write a check for TikTok. It's just not going to happen from a regulatory perspective, not under President Biden, not under former President Trump. It's just not going to happen. But what we could have is TikTok getting a pumped up valuation, and then people looking over here at Meta and saying, well, this thing trades at 24 times forward, and maybe you can go and apply this to Pinterest and Snapchat and the other ones. If you get a bidding process of TikTok, it will likely, in my opinion, lift the entire social media ecosystem in terms of valuation. Not necessarily over the next month or two, but as that plays out, the court cases and all that. Now, all important second quarter guidance coming in from Meta, 36.5 up to $39 billion. Man, that's an incredibly good second quarter, but Wall Street already had those expectations already in place. Midpoint analyst estimates was for, I'll blow this up for you so you can actually see this. You don't have to put your glasses on. $38.3 billion. The high-end estimate was close to 39. Let's say Meta sandbagging just a little bit because they did really raise their guidance last quarter and they beat by $240 million. So they have a shot at maybe putting up $40 billion in revenue. That's still only slightly above where expectations were already at. Now you start looking for Q3, probably a $40 billion quarter. You start looking for Q4, there's your upside. Is it just 10% better than a normal quarter, or with the disruption around TikTok, maybe the election, all that other stuff happening in Q4 this year, could you have an upside surprise for Meta? That would be the upside, at least from the revenue perspective. Now, other things in here were interesting, and it doesn't just apply to Meta. If you're in the chip space, if you're in Taiwan Semi, if you're in ASML, if you're in any of the data center plays out there, I think this information was relatively bullish. They're saying that their full year expenditures coming in at $96 to $99 billion. The prior outlook was for 94 to 99. So they're tightening it up a little bit. Definitely raised it on the low end from 94 up to 96. So expect higher expenses at Meta, which will reduce the profit. And I think that's one of the reasons why, this thing continues to plunge in the after hours. Now, more bullish for the data center plays, the NVIDIAs, the AMDs, the TSMs, maybe even Intel as well. All the super micros, all the semiconductor plays that are playing a part of this AI data center build out. Well, here you go. We anticipate our full year 2024 capital expenditures to be between 35 and 40 billion. That's an increase from 30 to 37. That is a big jump up. So on the low end, they increased it by 5 billion from 30 billion up to 35. On the high end, they're thinking 37 up to 40 as they continue to accelerate their infrastructure investment to support our artificial intelligence roadmap. And they are not providing guidance for 2024 in terms of capital expenditures, but they think this will increase next year. So you're going to go from 35 to 40 billion this year, maybe 40, 45 next year. We already know Google and Microsoft are doing about 50 this year. My guess is they'll probably do at least that. And then when you come over here and look at the quote from Mark Zuckerberg right at the top of the press release, they say our new version of Meta AI with Llama 3 is another step towards building the world's leading AI. So they're stopped talking about those fancy ski goggles and the metaverse. Now they're talking about AI. And obviously Meta has kind of an open source approach to that. They don't have this $20 a month OpenAI or Gemini type of service. And so Meta's taking a little bit different approach. The expenditures are not going to be offset by any incremental revenue, at least in the shorter term. And we'll see if that approach pays off for Meta. And again, the payoff will be subsequent quarters. You have a bump up in that revenue and eventually maybe a new product from Meta as well. Now, tell you what, guys, $36.5 billion worth of revenue. Last year, you were at $28.7 billion. Now, last year you were, 131% lower on the shares as well. What's really impressive about this company, you got to give them a hats off. They, in the press release, they also noted that they reduced staff count by about 10% year over year. So they actually reduced headcount and still were able to grow revenues year over year by over 27%. And then we're guiding for 20% growth for the upcoming quarter. My guess is mid-teens growth after that. But look at your research and development, ticked up a little bit, not much. Marketing sales, not a whole lot. In fact, your marketing sales actually went down from 3 billion down to 2.6 billion. So you increased your revenue, but you didn't have to spend more on marketing sales. They spent a little bit more on general administrative. You see your total cost from 21.4 billion up to 22.6 billion. So you take this 36 and you minus off 22.6 and you get, boom, $13.8 billion of positive operating income. Last year was just $7.3 billion. Net income paints the same story. $5.7 billion last year, all the way up to $12.4 billion. Now, Wall Street knew this was coming. Wall Street priced it in. That's why you've had shares on a monster rally. And sometimes it's a sell the news, buy the rumor type of thing. And I tell you what, Meta delivered. But now it's about what's next. What's next for Meta? What's next for the AI? How are these investments going to play out? The Reality Labs, which I'll show you in a minute, hasn't paid off at all. And we'll see if AI pays off since they're spending billions of dollars on it. Now, from a balance sheet perspective, absolutely nothing to worry about, folks. We got $58 billion worth of straight cash home meat, as Randy Moss would say. And we've got some long-term debt coming in about $18 billion. All in all, you have total liabilities at $73 billion. You almost balance that off just in cash. You certainly balance it off in your total current assets, let alone all your assets. From a balance sheet perspective, that's mega cap tech for you right there. Now, your net income gets pulled down into our cash flows from operating activities, and we get to add things back like stock-based compensation, depreciation, amortization. Your accounts payable gets back, and you get your net cash provided your operating activities. Look at this, guys. Up to $19.3 $3 billion. That is in just 3 months. This company is producing nearly $20 billion of operating cash flow. Last year, you were closer to 14. And we talked about all these expenses. Look, we're talking about how they're investing in infrastructure. They've got headcount, obviously, still. They got taxes to pay. But look, your purchase of property, plant, and equipment was $6.4 billion. Last year was $6.8. So this kind of also supports the thesis. When we did our TSM video, it was either last week or the week before, the CEO of TSM said, hey, the back half of the year looks good. We also did a video on ASML, which makes the lithography equipment that makes a lot of these cutting edge chips. They also said the back half of the year looks better. And this is where you're seeing it. You're seeing in the most recent quarter, you're actually down year over year on capital expenditures, but it's next quarter and the following quarter is when you're going to see the acceleration there. That's also being priced in by Wall Street. They're expecting $20 billion of operating cash flow from Meta next quarter based on the revenue estimates that we got. But the acceleration is going to come in the property, plant, and equipment. That's good news, though, for the semiconductor industry. It means those sales are coming. Doesn't mean it's not already priced into the stock and you go run out and buy more semi stocks, but it just means those orders are going to come in. Now, what do you do with all this cash flow? You got $19 billion. You only burned through about $8.7 on investing activities. Well, you're buying back the stock, and you bought back over $15 billion worth of it. I tell you what, you should have waited until the stock dropped after earnings. These companies are great at building products, great at servicing customers. They're terrible at picking where their stock is either topping or bottom. Tell you what, $15 billion buyback in a quarter. That's a big one. They also gave a dividend payment. Hats off, applauding, standing ovation to Meta for having a dividend. I think other companies, Google should do this as well. You had about $1.3 billion in payments there. And this is a dividend growth story, guys, because you only paid $1.3 billion in the quarter off $19 billion in positive cash flow. I tell you what, that is a dividend that is going to grow and grow very, very rapidly. Now, we love to beat up on Meta. Look, we just gushed over them. It was like I was writing a love letter there. Well, I tell you what, you had Reality Labs tick up $1 million in terms of revenue. It went from 339 up to, more than $1 million, $100 million. So you actually had some positive growth there on the Reality Labs side. That's I don't want to say that's bullish for the company, but this is one of the first time I've seen this Reality Labs segment actually generate positive revenue growth, and it's still losing money though. Here's your 3.9. You lost $4 million last year. You lost about almost $4 million this year, and so that just gives you some context. If this company was not investing so much in Reality Labs, and maybe they would have gone into AI or something when they got into this metaverse thing, well, you wouldn't be dusting off $4 billion a quarter, and instead of making $13.9 billion in positive operating income, you'd be making like 16 or 18. So this stock actually would be higher. So they're doing you maybe a favor at Meta, because eventually maybe Reality Labs pays off. Maybe it doesn't. Maybe it turns into some other product. But they're doing you a favor because those losses are contributing also to the fact that shares are down in the after hours. So get over here and look at this from the technical segment. Those of you who follow our channel closely, watch our Friday videos. More importantly, watch the technical segment. We said there was a gigantic gap on the Meta chart, and we weren't going to chase this one. We were going to be patient. We weren't going to have FOMO. That's an amateur thing to do. When you have this big, giant gap in the chart and you had earnings like a day away. Now, I could understand the company puts this gap up here, letting it run for 3 quarters or 3 months. That's not a big deal. But we had this gap, look like maybe a topping pattern was forming in Meta. And here we are. We're getting an opportunity. Would I run out tomorrow on Thursday and run out and buy shares of Meta? Not a ton, but I wouldn't blame anybody for wanting to step in. The numbers are fantastic. Yes, we are in for 2 or 3 quarters at least of the numbers normalizing a little bit as capital expenditures will catch up with some of the revenue growth that this company has been putting up. What we would like is this gap. Now, everybody's going to be looking at the same chart. Everybody's going to be seeing the all-time highs back in September of 2021, back here at 382. We also were set up at about $400 per share on before the last earnings call, the Q4, which shot this thing up into the stratosphere, up over $500 per share. So everybody is going to be waiting for this gap to fill. Would I be waiting for the gap to fill to the penny, to the dollar? Probably not. Not on a company, especially if you're going to hold this for the long term. If you're swing trading this short term, yeah, wait for the chart to give you the signal. But this is a company that's so financially sound. They're also now paying a dividend as well. And that dividend is going to have dividend growth. So over the long term, you're going to be rewarded by holding those shares over a long time, realizing that dividend growth every year or whenever Meta decides to raise the dividend. You're also getting the share buyback, which will go a little bit further now that shares are trading a little bit lower. And look, the AI race is just beginning. It's going to be a marathon. It's not going to be a sprint. It's going to be an absolute marathon. Meta is well positioned. I like their strategy of open sourcing. It's kind of a thorn in the side of Microsoft and Google. I don't know if it's necessarily going to pay off from a revenue perspective, but they are creating world-class language models at Meta, and you have to believe at some point they turn that in to at least a additional product on their popular social media apps, or maybe a new product. Love what Meta has going on. If you are patient, pat yourself on the back. You're going to be able to get this one at a lower price. Small allocation maybe later this week as this gap begins to fill. But I tell you what, the momentum is going to be completely out of this stock. And I think you're going to have some opportunities here. Again, wouldn't be too greedy because everybody's going to be looking at the same chart. Hopefully you guys enjoyed today's video. Obviously be back later this week. We got a lot of tech earnings and I look forward to bringing them to you later this week. Thanks for tuning in. Good luck with your investments.